Now, we're going to revisit something that was covered in previous lessons under classification of taxes. Now, you said that in classification of taxes, tax can be classified based on, 1, the tax base, 2, administration arrangements, and then 3, there was tax rate. So, then it was mentioned that a tax base refers to the legal description of the item with which VAT, in this case because we're dealing with VAT applies. So when you deal with the value of supply, we are trying to answer the question, on what are we charging VAT? We already said VAT is a tax. It is a proportion of your wealth that you have to give up to the state willingly. So on what do you charge VAT? What is the value? Meaning that this value must be quantified in monetary terms. Now, if we flash back a bit to what you covered in law you said that every time a transaction occurs, there is either that transaction being done at arm's length or it is not at arm's length. So what you described as arm's length or an independent, between independent parties, you said the parties engaging in the transaction are independent of each other, and as a result, the prevailing market price is what is being charged in that transaction. That was a transaction that is at arm's length. Then there was a transaction that was not at arm's length, where, for example, you have related parties. So because of the relationship, the special relationship that the parties may have, maybe a subsidiary and a holding company, or maybe between family members, something like that, because of that special relationship, the market price tends to be compromised. So you find that in most of the cases, the amount that is charged for that transaction may be lower than the market price. So the same we're going to apply here, that we're going to look at what are the terms of that transaction. Is it at arm's length or is it not at arm's length? Are the parties independent of each other or are they related as a result of some special relationship? So in that case, in case of independent parties, or if the parties in a transaction are independent of each other, independent parties, the value of the supply is going to be, value of supply is the price charged. If the parties are related, related parties, and you said in related party transactions, most likely there's going to be a compromise on the market price. We're going to apply value of supply. Supply is the prevailing market price. That is the first case. The other thing is for imports. So let's go to the Act and then you see the other circumstances. Now, for imports, the taxable value is the value for duty and duty. So this is number 1. You can have that as Roman 1. Roman 2 for imported goods. Value of supply is value for duty plus duty. Now, normally when you import goods, when goods are imported into Kenya, they are going to attract a tax called customs duty. So when you talk of value for duty, most of the times, depending on the international trade terms, this could be the cost, insurance, and freight value of the consignment, plus the duty that is charged by KRA once the consignment checks into our ports, whether inland or the seaport. So we will take, for example, let's say you are importing a vehicle. So the cost, the CIF price of the vehicle is, let's say, 1 million. And on this, KRA slaps a duty of 25%. So there is going to be 25% import duty or customs duty. So we take 25% of 1 million, which is 250,000. Now, if you're going to be charged excise duty, you're going to also include it. So we're saying the value for duty, CIF, cost, insurance, and freight, this is the value on which we are basing the 25% plus the 25%. So here, the value for VAT is going to be 1,250,000. So this is what you're going to charge VAT on. Now remember, we had said earlier that VAT is charged for the goods that are supplied in Kenya. So it doesn't really matter here whether wherever you got the vehicle or whatever the consignment is, wherever you got it from, if you had paid tax, that tax is capitalized. So it is going to be part of this. So we are not considering that you paid tax in Japan, in Germany, in the US, in the UK. We are not considering that. As far as the bill of lading is concerned, this is what was indicated. Then the third one, we are still dealing with the value of supply. The taxable value in respect of imported services is the price charged for the service. Now, if you are importing a service, remember, it is a service provider who will come over and offer their service. So we cannot be dealing with customs because here there are no goods that you're dealing with. So for imported services, the value of supply is the price charged. Now, the other one is when you're making metered supplies, like electricity. That means the supply that you're making or what you're selling is on continuous basis. So at every point when we determine, when we read the meter, that will become the value of supply. So the next one is a taxable person who is a retailer and mainly supplies taxable goods is required to quote or label a price that is inclusive of VAT. So he's saying for retailers, always quote prices inclusive of VAT. Now let's say the importance of that you're a retailer. Now from business class, a retailer sells to the final consumer. That is the technical definition of a retailer. You are selling whatever it is to the final consumer. Now, if you flash back to the introduction for VAT, we said that the impact and the incidence of VAT are on two different people or persons. That for whatever goods are being sold by the retailer, the impact, the first point of contact between VAT and the person is on the manufacturer. Then, the final resting place, the person who bears the money burden of taxation for VAT purposes is the final consumer. The incidence lies with the final consumer. So therefore, since the incidence will lie with the final consumer, the price must be inclusive of VAT, so that the final consumer can get to pay VAT, get that VAT collected by the retailer, and then accounted for by the retailer and submitted to KRA. That is the importance of that. So one of the things, the obligations of a retailer who is registered for tax purposes will be that they must always quote the prices inclusive of VAT. You might have seen these in supermarkets. As you get into a supermarket, there's going to be usually it's like a form of notice, though it's never written as notice. So there's going to be those writing in red, most of the times bolded, or prices are inclusive of VAT wherever applicable. That is because they are supposed to tell you that. So as you get into the supermarket, please beware that you pay VAT because you are the final consumer, and in the supermarket in that case is the retailer. Then where goods or services are sold to unregistered persons, the price should also be quoted inclusive of VAT. So sales to or supply to unregistered persons, quote prices inclusive of VAT. For the same reason. Now remember I said individuals are never registered for VAT. So if you're selling to individuals, then you have to include VAT. Then other unregistered persons would be like in our previous lesson where we said you could be deregistered because you did not meet the threshold turnover, or the commissioner felt that you're not complying with the laws and regulations that have been provided, so you get unregistered. So the proof of this registration, remember we said, is that that person can provide a valid registration certificate. So if someone can't provide that, then you know that that person is not registered, and as a result, whatever, even if normally you quote prices that are exclusive for that particular person, because they can't prove their registration, you're going to quote the prices inclusive of VAT. Then you're told where goods are purchased under hire purchase terms, the consideration for the supply will represent the cash price, which is the value for VAT, and the interest or finance charge will be disregarded in determining the value for VAT. So for hire purchase transactions, consider the cash price. Hire purchase interest becomes an allowable deduction for tax purposes.